PMF, the most elusive term in the startup world. But Carles, let's start a bit with your background, which is quite unique, which is also quite typical actually for early GTM hires.
Yes.
But you were the first angel investor in 11 Labs. Before that, you were part of a unicorn, also scaling it from operations side. You worked at Uber. But tell me a bit about your background and ending up at 11 Labs.
Yeah, I think like I've done all of the possible situations, like type of jobs that you can get in a startup, except for engineering.
Yeah.
I've done ops, I've done like product, I've done sales. So I think like it's the full like cycle of it. But like my background is like I moved to London 16 years ago, went to banking after uni, and then realized quickly.
What did you study, by the way?
I did international relations.
International relations.
Yeah, and I quickly realized like banking was not for me at all. But I spent like a good almost 2 years there, and I joined Uber in the early days. So the company was fairly big in the US, but outside of the US, we had about like 20 people, small office in London, small office in Paris, and that was pretty much it. And then after that, spent a few years there, ended up joining a tiny, tiny company. We didn't have any money, any product or anything, but we had an idea about implementing AI for insurance, and we ended up becoming unicorns, and I built a business in the US, in Japan, in Europe, and then one thing ended up leading to the other one. So.
Yeah. You're a bit of a Swiss Army knife to some extent, and I think that's the interesting thing to discuss. You know, talking about PMF, but you know, getting there in those early hires, especially like talking about the 10 first. And actually, you were the first angel investor in 11 Labs. Quite unique situation already there. So you had built a thesis around the space. You spoke with Matti and Piotr, the founders of 11 Labs. You invested after 30 minutes. And then you joined eventually as VP of Revenue, the first GTM hire. So, you know, reflecting a bit on your journey, and you've been at Uber, you've been working operations, you've been doing product, everything. But what would you say are the key traits in those earliest go-to-market hires? Is it technical credibility? Is it, you know, being more rounded?
I think for me, it's all about being flexible and testing a ton of hypotheses all the time and trying to find the ground truth. It's like literally in the beginning, you have no idea what's going to work. You have no idea who is your actual buyer, your ICPs. Like, test as many things as you can, as quickly as possible, and then just like hammer and go all in into like one or two of those ones, so that like you can start building that motion, that repeatability across the board, right? When I hire people to like open new markets, I always find like the best ones that have performed super well for me have been like people that are extremely energetic, passionate. You don't have to handhold them. Like, they will make a ton of mistakes because they're iterating a lot on their approach and their pitch for customers. That works super, super well. And I always recommend everyone to like, for the first GTM hires, that type of profile works very well.
There's a good YouTube video by Andreessen Horowitz called The Sales Learning Curve. I recommend watching it. 6 years old, but still relevant. And they call them Renaissance reps when they're very early. And these are these individuals who maybe they don't have that typical background, entrepreneurial, passionate, and they've done a lot. And they're usually the right fits early on. But when you joined as number 4 at 11 Labs, 2022, where were you revenue-wise at that point?
So we had just launched the product.
Yeah.
So we launched a few days before me joining. Very quickly, like 11 Labs, we do AI voices, in case you don't know. We've also extended, like we build foundational models. We've now extended toward like end-to-end applications and products, whether you launch an AI agent that interacts with your customers for customer queries or like personalized like experiences and all of that stuff, or you use it for media and content creation. And what we ended up going through is like we launched at the end of January 2023. Within a month, we had over 1 million customers or over 1 million users. Like the first 2 enterprise...
Paying users or...
Paying users, yeah.
1 million paying users.
No, not paying users. Like people, some mixed people paying, some mixed people like free users and so on. And then we had the first 2 enterprise customers fully signed. One in Germany. The first ever enterprise customer was a customer in Germany. And the second was a media and entertainment company in the US. And then we were
for the, like ACVs.
The first
contracts.
ever was $12,000 per year.
ACV, yeah.
And then today, it's like close to 100K. The second customer was $36,000 on a 2-year contract. Today, they spend more than 700K per year with us, right? So yeah, it just gives you an idea, like, you like iterate a lot, figure it out, and we were only 7 people in the company at that point in time, right? Like, of course, like, little sleep for everyone. We're trying to just, like, build the plane as we were flying. But it's that iteration, that constant flexibility that, like, will push you towards, like, delivering more.
But double-clicking a bit on that, so you signed your first enterprise deals quite fast, launching.
And they were outbounds.
So how did that happen? Were you enterprise ready? Because, you know, moving from more PLG to enterprise, especially in AI, it's not about the models. It's about the boring shit. You know, access levels, API endpoints, you know, that boring enterprise stuff.
Yeah.
Were you guys there already?
No, zero. We had absolutely zero. But we're essentially selling them an idea. And the idea was like, look, the technology is coming and it's going really fast. If you adopt it today, you're going to be at the forefront of everything that you do, right? And what we end up realizing is like, by iterating a lot on the pitch and outbounding and figuring out who was going to be buying the product, we realized that there was a big market opportunity for them.
Yeah.
And they jumped in. Like, all of them wanted to actually test it, figure it out. We helped them on everything that we could. And then they realized, like, shit, return investment is there. Like, we could start automating a ton of, like, our workflows.
Yeah.
Let's go all in. So, like, it was a very short sales cycle, but fundamentally because, like, we tapped into, like, this FOMO of, like, if you don't do it, you're going to fall behind. But if you do it today, you're going to be driving innovation in your entire industry. And that ended up kind of escalating. So you sign one, then you sign two. It gives you even more motivation. So it just becomes a flywheel effect.
Yeah. But were you working with Matti then? Because, you know, you were so early. Naturally, the recommendation is always you need to have founder-led sales until X, Y, Z. It's a moving target. But usually, you know, VCs say at least until $2 million ARR. How were you guys doing it? You were probably working very closely with Matti.
Non-stop. Like, I think Matti and I, we kind of got married when we joined the company. We started working together, like, non-stop.
Yeah.
Like, it was true. Like, we would, like, talk, like, 3-4 hours, like, constantly, like, with Slack all the time and everything. But at the same time, what we found is, like we would pitch ideas completely differently and then talk to each other to see which one had actually worked best.
Better, yeah.
And then once we started getting traction, then I remember, like, one day Matti comes to me and is like, Carles, from now on, like, on the go-to-market side, I report to you. For everything else, you report to me. But for go-to-market, I will report to you going forward, right?
Yeah.
And that's the moment that we organically decided like, it was important to actually, like, isolate Matti to, like, being much more on the, like, top, super high enterprise sales.
Yeah.
But also being able to run the company, because otherwise you're always bugged into, like, the details of contracts and everything, right?
But that's still quite unique, how fast you could do it. I guess part of it was that you were the first angel investor. There was a lot of trust from the beginning between you and the founders because you had already made a big bet on them financially. So naturally, that's a bit unique. But still, like, the growth of 11 Labs, so you launched in 2023 early. You were 25 million ARR end of 2023, 90 million ARR 2024. What are you now at, approximately?
So those numbers are, like, a little bit off. Like, that's what's been reported in the media. Like, those numbers are off. Like, we were much higher than that. We don't publicly...
Higher than that.
Yeah, we don't publicly talk about the numbers. But, like, fundamentally is the idea that, like, we are going very deep into the enterprise segment. So today, like, almost 40% of the revenues, global revenues for us, come from an enterprise side, right? Like, we have 240 more or less people globally.
Yeah.
Like, we're actually betting big that, like, that is the segment that will sustain the company for the years to come in general, right?
Where are you now, ARR-wise?
We don't publicly disclose the numbers. I wish...
Over 100.
Over 100. Yeah, we got to 100 in 17 months.
Yeah. Okay, but let's get into the juicy stuff now. You know, PMF.
Yes.
Elusive word. I think right now, like many are feeling with the AI hype and momentum, the explosivity we're seeing right now in ARR especially. We're going to discuss many levels here now about the hype cycle we're in. But for you at 11 Labs, and you've been at other journeys also, like, have you felt the danger of false positives? Because a lot of companies and customers are trying out tools now everywhere. So, you know, how do you assess that you know, this revenue is more driven by testing rather than actually committed customers And is that something you've seen? Also looking at churn and looking at the customer dialogues.
Yeah, completely. I think it's a problem of qualification, right?
Yeah,
Like,
yeah.
if you qualify ruthlessly from the beginning,
Yeah.
you end up spending enough time in the ones that actually really matter.
Yeah.
So you end up like kind of separating it. At 11 Labs, we've split it between like commercial and enterprise. So on enterprise, we allow more experimentation. We handhold the customers. So that like enterprise, much bigger corporations and so on, strategically if you want. On the commercial side, which is like smaller customers, like we don't allow like our reps to spend that much time like hand-holding the customer like in those like early test and validation phases. We'll still give them help, but we'll not like essentially support them all the way in, because otherwise like there is endless variation of that, and then you end up never closing a contract.
Yeah, but qualification, I think that's a very good point. That's core for any founder. I always say like when you hire your first Renaissance rep sales, like qualification is key.
Yeah.
You need to push them hard to ensure that they qualify properly, you have a good process in qualifying.
And I think it's like even more interesting, like when you look at the marketing, the market like segmentation perspective, right? Like because I built the US, Japan, Korea, India, like Mexico, Brazil. So I know like the details on all of these guys. And whereas in the US, if you spend a lot of time like doing more qualification and talking to the customers, you might end up closing them still. That's okay. But if in India or in Mexico, you end up actually spending a lot of time, like in the early days, like trying to convince them to test, like getting the feedback, extending like their trials, that contract, I can guarantee that is unlikely to close. Fundamentally, because from a culture perspective, is a completely different thing, right? They will not tell you, no, I don't want to buy this straight away. They will just delay it as much as possible until it kind of falls by itself, right? Whereas like in the US or in Europe, we will be very clear saying like, no, this is not interesting, I'm just not buying, right? So there is a lot of nuance specifically on the qualification on a per mark basis.
But you guys have a pretty horizontal product. You can sell to many different industries. That's a blessing and a curse. I've been an early GTM, the first GTM hire for a deep learning startup, like pre-ChatGPT, that was selling a horizontal deep learning platform. It was hard. How did you guys approach verticalization, focus on specific verticals? When did you start doing it, or did you do it from the beginning?
Yeah, so it was interesting because like all of the VCs will always tell you like pick one area and just go very in and like deep and own it and be the best one at that. What we ended up doing is like a completely different thing, and investors in the early days they were not that convinced of that. So we outlined 13 different ICPs that for us were interesting, and we could see some results already in the data based on contracts that we had been signing. And then we used those 13 to actually nail it towards like a set of like 5 ICPs that we want to go even deeper. And then from there, select 3 of them that actually we would own and motivate the sellers to actually go after those ones, right? So that's still, the list of 13 ICPs is still in there. So if there is an inbound deal, we'll categorize it and we'll do it. But from a rep perspective, no one is allowed to go outbound if it's not outside, if it's outside of those 3 core ICPs that they're incentivized for. But it was more like, there's an endless amount of possibilities. Let's find out very quickly what actually is delivering the most value, and then we will narrow until we decide what is the core for us.
Good. How big is your sales team now, go-to-market team?
About 68, 67 people.
Interesting. In terms of scaling the team also, so when did you feel that you had PMF? Like Michael Siebel from YC famously said, like pre-PMF, it's like you're trying to push the rock up the hill. When you have PMF, it feels like the rock is coming down and you need to run down fast so it doesn't squeeze you. But how did you guys, like, did you feel it, or did it just happen right away when you launched?
No, I think like I have a variation of this where like for me PMF, like yes, you don't have PMF and like you're pushing the rock up the hill. It's like it just feels really like tiring all the time and tough. Like when you have PMF, you're like pushing the rock up the hill, but it has like a rollerblade like underneath. Right? So it's still like it's really tough to push it, but there is some less friction that happens in there, right? I think like for us, like I don't think we like officially said we have PMF until at least a year into like selling properly to enterprises. Because like it felt like we have too many ICPs that we're going after. Like any of those ones can be like $1 billion company by itself. like until I actually am able to narrow it to like top 3, I'm not
Yeah.
going to feel I have proper PMF, right?
Yeah.
And like for me, the PMF was like less on the self-serve growth-to-market growth side and more on the enterprise side. Because at the end of the day, like enterprise is what sustains the valuation over the long term. So like by delaying the decision, like we have now PMF, we know what we're doing, we know how we're doing it, then essentially it forces you to constantly keep iterating on all of this stuff all the time. And then all of the account execs, all of the SDRs that I have, like they're incentivized every single quarter as part of one of the OKRs to actually come up with like testing ideas that we need to actually like push.
What's the split right now, revenue-wise, PLG, self-serve, and enterprise?
Almost like 60%, a little bit more like 62% is self-serve, almost 40% is like enterprise.
Yeah. It's still pretty unique what you did, that you pretty much started with both from launch, which is quite unique. Usually right now, you look at these explosive AI startups, you know, they start with the PLG, like PLG plus AI right now equals hockey stick, and then they start figuring out how can we sell this to the enterprise. But you did both from the get-go.
I remember like pitching Matty and Piotr, the founders, being like, if we truly want to build a once-in-a-generation company, like we need to figure out like enterprise like in the early days.
Yeah.
Because you have the examples otherwise like Airtable, right? Like Airtable is a fantastic example. Like PLG Motion works super well. Those guys absolutely crushed it. And then a few years in, they realized like, oh, wait, the actual valuation of the company, the revenues will come from the enterprise side.
Yeah.
Let's switch the culture towards servicing enterprises. And they actually ended up going through like a 2-year almost like uncanny, like this valley of death.
Yeah.
Where like they struggle on the PLG motion, they struggle on the enterprise side. They just like, because the culture wasn't actually built for that.
Yeah.
So like when we were talking with Matty and Peter early on, it was like, the more we delay the transition from PLG self-serve usage towards enterprise, the more the team will struggle to make the mental switch. Like you need to have like proper SLAs, you need to actually build those unsexy features.
Exactly.
You need to actually like work with customers, have forward deployed engineers. All of that stuff is a cultural change that actually has a big impact in the organization.
Exactly. And there can be resistance in the company for it.
Always.
We're talking about revenue explosivity, and you know, we've all seen the hockey sticks now. You know, startups having launched for 1 week, coming out and saying we're at 50 million ARR after being out there for 1 week. And I said at one point, it's starting to feel like ARR is the new community adjusted EBITDA. What does it even mean anymore? Like, you launch for 1 week, you have a product which is $20 per month, doing some kind of Anthropic API arbitrage. 1 week, and you extrapolate that times 52, and then you're there. How do you guys at the Level Labs view this like ARR hype going on right now? Like, how do you approach it?
I think at a personal level, I think like, I mean, there's always this type of things, right?
Yeah.
It's like always like some startups trying to recalculate the way you do stuff. At 11 Labs, we kept it very simple. It's like we have this like agreement with investors, like we'll tell you the good and the bad, and we'll try to fix the bad, simple and plain, right? Our investors have access to Stripe and have access to all of the data by themselves so that we don't have to actually like show anything. I think at a personal level, I understand it, right? Like it's like the cycle is so early and the numbers are so strong that like the reality is like a Lovable, an 11 Labs, a Synthesia, like a Cursor, like we're building stuff as we go, right? So like the fact that we're making so much money, it just means that like product market fit is there, return investment for our customers is already there. We need to actually nail how, like companies need to nail how they produce the results in a way that actually like it is publicly accepted, normal for everyone, right? But I agree, like if you launched yesterday and then essentially you time it like 365 and you're like, shit, I reached 1 million ARR, it's like, that is actually not ARR, it's called run rate, right? But
annualized revenue.
Yeah, exactly, right?
Not ARR.
Yeah. And it's fantastic, don't get me wrong. But like the same way you go this, you can also go down, right?
Yeah.
So like once you start signing customers to like and you have them for multiple months, and then you sign like year-long contracts, then that's when you can start talking about like pure ARR perspective in general, right?
Exactly. Like you can't have ARR after 2 months yet.
No.
It's impossible. You don't know your churn rates or anything. But you know, talking about that, I've been talking a bit about it, PMF collapse, which I think we're going to see more of. We already had like Jasper, very hyped, over $1 billion valuation, nobody remembers Jasper anymore. Character AI, Windsurf was acquired by, acqui-hired by Google after Anthropic cut off, API access. But still, like, PMF collapse is a thing. It's going to happen to some. How do you at 11 Labs view this? Like, PMF is still something you earn every day. It's something that moves all the time. But what's your philosophy at 11 Labs?
1,000,000%. And I think like for us, like, or at least the way I see it is like, you also need to nail distribution, right? Like PMF also comes as a factor of like distribution. If you're able to actually like have multiple channels that are producing results for you in parallel, and those channels can vary based on the markets that you're targeting, right? Then essentially that has an impact on on your product, on your defensibility. Like proper PMF will come if you're able to sell in multiple channels at the same time, right? Like that needs to happen. It's like otherwise, like you're competing with like 1,000 different companies, and anyone can spin up a brand new like 11 Labs tomorrow, right? Like it's actually fairly simple if you want it. Not the core research, but the actual UI is fairly simple. So how do you actually keep that defensibility? How do you make sure that you're growing much quicker, like by investing in the product, foundational models, or by also investing in the distribution side so that people buy you across different moments of your time, or use you across different moments of the time, right?
But it feels like now where we are in the cycle, distribution is the moat.
Yes.
Momentum is the moat. I always say the floor is lava right now. The only way you survive is that you move all the time. Otherwise, you're going to be gone very fast.
Completely.
And talking about being gone very fast, I had a chat a few weeks ago in Helsinki with Carles Reina, the founder of Linear. And I love Linear. Like the whole story, they were profitable year 2, backed by Sequoia early on, just raised at a 1.2 billion valuation. And Kari was very clear, like, if you want to succeed globally from Europe, you need to build the product like Europe doesn't exist as a market, but you build for US from day one. Because it's much easier to first get traction in the US if you can build a good enough product for the US market, then to come to Europe, then vice versa. How was it for you guys when you launched?
I think like the US is always easier because of the language, right? Like it's 300 million people, one single language, whereas in Europe we have like a lot of languages, a lot of jurisdictions, lots of different cultures. It's a lot more complex in general. But I think like you can still be building like a global company from Europe that also is catering towards like the European ecosystem. Because what I've been seeing over the past like 12, 18 months is like the European companies, European ecosystem has become like much more advanced on adopting it. And it's interesting because like we always think like US is the big market, everyone is like in there is like adopting technology, AI very quickly. Well, in fact, when I look at the stats of big corporations using 11 Labs, right, in the US, that is much lower than what it is. And we still power 75% of the Fortune 500 companies anyway, right?
75%.
Yeah. But in the US, it's lower than what I see like in Mexico or in Brazil, or what I'm seeing in like in India, or what I'm seeing in like in the UK and so European countries, right? It's like because the market is so big, we tend to generalize that like it's much easier, there is much wider adoption and so on. In practice, it's just because the market is big, but companies also move much slower than you would imagine, right?
But you built for the US from day one. Like you had the early US customers.
We built for English.
Yeah, no, well.
We built in English, and we thought like, our customers are going to be the ones that speak English day one.
Yeah.
We don't know where they're going to be, but they will need to speak English.
Yeah.
And we realized like, US was a big market, so it generates 50% of the revenues globally for us. But still, like, we saw like UK, we saw Germany, we saw India, we saw like Australia, New Zealand, like, we saw all of those versions of people that were like, you know what, I speak English, or I'm in an English-speaking country, I also want to start using it.
Yeah.
And that's essentially created like a massive effect.
Yeah. Great. I think we're out of time right now. Feel free to grab Carles after. Thank you so much.
Thank you.
Crazy journey. And looking forward to being here in a year, looking where you are then.
Thank you so much.
Thank you.